So one of the reasons that the market is selling off is because we've got this expectation that strong U.S. job growth in the United States means that we are going to see higher rates perhaps in the U.S. Perhaps that will feed through in inflation when you've got that robust jobs market. Certainly that played out in Canada for the month of June, where the Bank of Canada surprised the market by increasing rates after inflation came in a decimal point above expectations. And that perhaps had ripple effects in our real estate markets that showed up in the month of June for the Toronto housing market, where for the first time in 5 months, home prices slipped month over month. Let's bring in John Pasalis, president and broker at Realosophy Realty. There are signs of the slowdown month over month, and then year over year, prices actually increased. Sales are still growing. You saw an uptick in active listings. So how do we slice and dice all of this? Do you see an impact of the Bank of Canada's rate hike in these numbers? Yeah,
absolutely. And I think the big thing to keep an eye on is the fact that adjusting for seasonality, sales are down. And we knew sales were trending down. It was hard to differentiate, how much of that was seasonal, how much of that is a shift in sentiment, because we are seeing it. Buyers are pulling back, buyers are hitting pause. And a lot of this is the change in tone from the Bank of Canada. I mean, a single quarter point increase has really changed the market sentiment. We went from a market that was like fear of missing out and a lot of anxiety, and a lot of buyers now are hitting pause because they see the market cooling down.
I'm still hearing about bidding wars.
Yes, okay, so there are bidding wars, but what is happening is right now is this momentum is slowing down. So it's still a seller's market. I don't want to say the market is cooled dramatically. It's still a seller's market, but a lot more sellers who are holding off for multiple offers aren't getting those offers on their offer nights. So they're not selling on their offer nights. And this is a sign of a market that is transitioning from a very hot market to one that's starting to cool down.
Starting to cool down, or just taking a breather and then ramping back up? How do you think about that? Because we've seen these moments. I've got a few of these moments myself as a buyer where you can catch a bit of softness.
Yeah, so for sure, part of it is the weather, the seasonality. A lot of buyers who've been on the market for 4 or 5 months just want to hit pause in July and August. This is a very normal trend. But I do think this is going to be more than just a seasonal dynamic. I suspect as we move into the fall market, the market's just going to be more sluggish. And part of that is just the big increase in fixed rates that are weighing on affordability. They're making it harder for buyers to get in. So I think we're going to probably see a relatively calm market as we move into the fall.
At the same time, we're through now a municipal election in Toronto, where housing was a key priority for now Mayor Olivia Chow. How do you see that playing out? The promise for more supply, but also the prospect of increased taxes.
Yeah, so I think the taxes will probably not have a material impact. It's going to impact homeowners. I don't think it's going to weigh on buyers' decisions. But the supply question is a very slow one. If the city of Toronto is able to make strides in increasing density, allowing more housing in traditionally very low-rise neighborhoods, that'll be a positive step. But these are very slow changes that are probably not going to have any material impact on the dynamics of the market in the next couple of years.
We are going to get another Bank of Canada rate decision next week. Consensus has been flip-flopping on whether or not we would get another quarter-point rate hike. Right now, looking at Bloomberg consensus estimates, yesterday we weren't expecting a rate hike. Today we are. Rates going to 5%, another quarter-point hike in July. What will that do to the market?
It's going to ice the sentiment further. Again, when we think about the market in Canada, largely rebounded at the start of this year because of this signal that the bank was pausing and the expectation a lot of buyers had that rate cuts were coming in the near future. Well, now, as it looks like cuts are not coming anytime soon and rates are staying higher for longer, this is just going to take a lot of the pressure out of the market from buyers. And many of them are just hitting pause and just waiting to see how this flows through the market and whether they see some downward pressure in prices in the fall. I think some buyers are hopeful to find some value in the market.
So then how do you win? This is why people come to real estate agents, to get an edge. They just want to buy something. And they're persistently edged out in bidding wars. They have to deal with the financing. How do you win?
It's very hard to win in a market like Toronto. I mean, at the end of the day, we still have this fundamental problem where, our population in Canada grew by 1.2 million this past quarter. We're not building any more homes than we were, over the past few years. So you have a strong demand and not enough housing. And this is largely why we actually saw prices increase in the first couple of quarters of this year, despite higher interest rates. That is not something that anyone expected, but it again comes down to this sort of imbalance between the need for housing and the lack of inventory.
Okay, so that's if you're a buyer. What about if you're a seller? I track, in my neighborhood, what people are doing with pricing strategy. And
Yes.
It seems chaotic. It used to be, you price low because you're going to get way over, and then people pricing super high so that if they get $1 million, $2 million under, then, they're still above whatever their soft number was in the house. What's the strategy right now?
You have a fantastic finger on the pulse of that. You're absolutely right. I mean, the pricing strategy is a function of the current market dynamics. 2-3 months ago, everyone was pricing low, setting an offer date, getting multiple offers. As we move towards the fall, and even towards the summer months, where that strategy isn't as guaranteed because buyer demand is lower and there's just more competition, you're going to see more sellers just pricing high and saying, this is what I want, bring me an offer, there's no bidding wars, there's no offer dates.
I also see a big difference in homes that are fully redone, turnkey, ready to live in, and ones that need work.
Yeah. Absolutely. So the ones that need work are the ones that are actually selling for big discounts today. And largely because people just don't have the capital, right? So the turnkey homes are the ones that are moving very quickly. Anything that is a fixer-upper, we're not seeing as many investors active who have the money to take on those projects.